Welcome back. You're still tuned into Midcap Radar. The stock to focus on definitely is Trent. It's firing up in trade after reporting a strong set of Q1 numbers. The stock is up already more than 100% in 2024. Mangalam is joining us with the analysis. Mangalam, what's working for Trent?
Well, Zudio is working for Trent. In the last 6 months, the stock has doubled, but in the previous 6 months also, it had doubled. So over the last 1 year, last 12 months, it's actually moved around 3.5 times, and it's a snowball that keeps rolling. If you look at the revenues of the company, 4,100 crores. This compares with the street expectations of 3,800 crores. The EBITDA came in above 600 crores. The street was working with a number just shy of that 600 crore mark as well. And as a result of which, the net profit too has beat street expectations by a wide margin. But that does not tell you the entire story. In a quarter which was weak for the retail and consumer sentiment itself, year on year, the company's reported 56% jump in the revenue, 66% jump in the EBITDA, 90 basis points improvement in the margin, and wait for it, 135% jump in the profits as well. They are constantly expanding their store footprint, so they've added 6 Westside and 16 Zudio stores. Remember when Zudio started a few years ago, it was much lower in size than Westside, the number of size, but now we have 559 Zudio stores and 228 Westside stores itself, and they have 36 other formats as well. Most notably of them, the one which is on an expansion spree is the food and grocery business. The company said fashion concepts have registered a double-digit like-for-like growth, which is a positive. Beauty, personal care and innerwear, which is their emerging segments, has grown faster, now accounts for nearly 20% of their standalone sales. And add to that, there has been another development as well, which could bring in about 105 crores to their books, which is basically they will tender about 1.4 lakh Inditex shares that they hold. Inditex basically is the joint venture that they have with Zara for a buyback at around 7,500 rupees per share, which gives them about 105 crores. As of the last annual report, they held about 3.17 lakh shares in Inditex itself. The only problem, the valuations. It was expensive 6 months ago, it was expensive 6 years ago, but even now at 120 times, it is not particularly cheap. And the street expects that if the EPS growth continues, then maybe the company will continue to hold on to these valuations. The most important trigger going forward is that there could be a possible Nifty inclusion. With today's up move as well, the stock has hit the market cap of 2 lakh crore. But now as you look at it, from the last close, there have been counter reports telling you that this may be well part of the Nifty in the next inclusion that comes about.
Thank you so much for that, Mangalam, throwing light on what's actually worked for Trent this time around. But another stock on the radar is